chart that is being presented by my friend and one of the best tacticians I know in equities, Larry Tentarelli. He is the editor and founder of the Blue Chip Daily. Welcome to, thank you for joining us today, Larry. Welcome. And, you know, I've read that you got written up as one of the most helpful Twitter accounts out there. I think the top 100 or something like that.
Right.
So, you know, really appreciate your mission of trying to edify traders and share with them what side of the market you're on. So great to have you.
Thank you, Dale. I really appreciate it. Glad to be here. As you and I were talking about before, we've known each other for quite a while online, and here we are today.
Yeah, and it's amazing all the different shifts in the markets, and I've seen your flexibility. And let's start off with Larry. It's one of the best Januaries I've seen in my career, equity-wise, where, you know, there are a lot of bearish guys, including myself down there when Apple looked like it was going to break down. This huge move that we've had, and we're getting continuation into it. Do you think we've entered a new bull market?
It's tough to say. As
Okay,
far as a new bull market, I'm more focused right now on individual stocks and individual sectors. I think it's possible that the index could maybe trade in a range. When I look at my chart, you know, maybe 3,800 on the low side, maybe 42 to 4,300 on the upside. So, you know, maybe from an index perspective, maybe we're in a range, but I'm much more focused on what's happening with, you know, on a stock by stock basis, because there's a lot of breakouts.
You know, a great trader I know that I work with here at TradeView and TradeGate Hub, Mike Venezia, has been a loyal follower of yours for a long time. You're on his like curated list, and Mike's a great trader. You know, he has ideas every day, and just want to let you know that you know your reputation preceded you here.
Thank you. That's great to hear. I really appreciate that.
So tell us, you know, a lot of people talking about this range. I thought maybe there's a shot we challenge the August highs here. What sectors and individual stocks, because I know you do a lot with relative strength, you have your rules for being long. So why don't you bring us through a few positions that you have on and what you're thinking, and then later on what you might be avoiding.
Okay, perfect. So I'll walk you through some charts quickly. So the S&P, what I see right now on the S&P 500, because it's good to have an overall market view. A couple constructive things on the chart. So if we look at 3,800, this range held for a while in December. It did hold a much higher low versus October. But if you just look at the chart, this close above 4,100 for me was significant. It was more of a green light because we were just stuck between 38 to 4,100 for a while. So I think that the bulls have the upper hand right now over 4,100. You've got the golden cross, bullish 50, 200-day cross. Just there's a lot of good chart formation in this S&P chart. Triple Q, I think we see the same thing. So triple Q 295 to 300 was a resistance level. 1, 2, 3, 4. They went through it pretty sharply. And last week, the volume on the NDX last week was the highest weekly volume in over 11 years.
I see that big green bar there.
You know, on the NDX. Couple things we need to watch. Bond yields. We need bond yields to stay in check. So if bond yields don't break out over 390, I think that's good for stocks. We need the US dollar to stay in check. So this has been a test right here. It's testing that 50-day. And this came after the jobs report and after the Fed. As long as the dollar doesn't start to clear 104, then I think that's a positive for markets overall. Some positions, I've got a long position in AMD right now, just cleared the 200-day, a lot of volume. I bought it on this recent pullback last week, and it's just setting up nicely just below a potential breakout. But we've got the 200-day reclaim. You've got 1, 2, 3 rising moving averages. And
A
the
breakaway
200
gap to boot. Was that on an earnings call?
Yep, that was right after earnings.
Okay.
And
I love gaps, don't you, Larry? I mean,
So do
there's
I.
a message, and that's a problem with FX trading. You don't get them because we're 24/7 or
Yeah,
at
they're
least
very,
6.
very tight.
Yeah, I like gaps because there's all different types of gaps that mean different things. Breakaway, runaway, exhaustion. You can get islands. I think I'm going to move back to equities.
Here's what I like about AMD.
All right.
$80. So
Yeah.
we can see 79, 1,
Yeah.
2, 3, 4, 5 times it failed. Big move through 80. A lot of volume.
Real
I
nice.
waited for that little pullback. Now we just have a nice little consolidation, and I think the next move could be higher.
Lesson from Larry that you're seeing demonstrated live. Look how Larry looks left. Larry looks to the left. That's the market's memory, right, Larry?
Correct.
Okay.
I want to know. I want to know where's the pivot points been? Where has the market either, in this case, rejected the price and now it's
Right.
cleared above? It helps. So 80 for AMD is a big number. I'm going to take a look at just a couple other sectors quickly. So American Express, the markets have been, the media has been focused on
Consumer
recession.
debt. Yeah.
Guess what? American Express stock, no recession priced in here, starting to break out of that range. This is also after earnings. 170 was that breakout level.
Huge gap.
Yep. Disney. So I'm looking at Disney stock today. So Disney stock showed up on my radar screen when it closed over the 200-day, because Disney's been under that 200-day for a long time. So it lost the 200-day 2021. So I focus on trends and I focus on moving averages. So when I see a stock that's been below the 200-day for, what is that, 15 months?
Yeah.
It failed here.
Yeah.
And then it finally got through. So I've got it gapped higher today.
Is that today's action, overnight action, or no? We're now trading live. So that last candle looks like it's buy the rumor, sell the fact on Disney.
This is after the news. So keep in mind now, Disney's had a huge run up into earnings.
Yeah.
So what I'm looking for here, it's just like AMD. AMD gapped up after earnings, and I didn't want to buy that initial gap.
Yeah.
So with Disney, the same thing. So I didn't buy it this morning, but I've got it on watch over the next day or two. And, if it starts to fill into this gap over the 20-day, 200-day is flattening out. So that's a chart of interest.
Would you buy a break at 105?
No.
Okay.
I would want to, if Disney breaks below the 20-day, to me, that would be weaker.
Okay.
So I'd rather see it hold this 20-day in the
near term. You don't want
to
see the 200-day tested again.
I'd rather not.
Okay.
I'd rather see it hold this 20-day. I'd rather see this 50-day come up, but
that's a 50. Yeah.
Yep. Okay. That's on watch. So emerging markets, if a lot of these are weak dollar ideas.
Right.
So emerging markets, it's had a nice recovery move over the 200-day, over the 50-day, but it's real simple. If the dollar stays weak, emerging markets, China,
continue. Yeah.
The metals, the miners. So Freeport, copper is always on the radar screen. It's been over the 50-day. So I don't have a position here. I've got a position in the ETF pick, which has all of these.
All the coppers or other miners?
everything. It doesn't have gold miners. I've got a position in gold, but it's got, Vale, BHP, Rio Tinto. I think Freeport, I like Freeport exactly where it is. And I would just want to see it hold $40.
Okay.
So as long as Freeport holds over 40, ideally, I'd want to see it hold this 50-day.
Right.
But as long as it holds over 40, I think it's in good shape. I like copper, I like gold, I like all the metals, but keep in mind, if this was a school bus, all of these metals are the passengers.
Yeah.
And the US dollar is the bus driver.
I like it.
So, whatever we think about whatever, if the dollar spikes higher, all these metals charts are going lower. But right now, the dollar's in a downtrend.
Yeah, I don't think it's going to spike higher, but that first pop that we had from the employment report Friday, and now we're pulling back. Dixie, if it holds 102, could make a move to 105, kind of like in an ABC fashion, is kind of what I'm looking for. I don't think the dollar's going to just break to new lows without one more push up prior. And let me ask you this about the 10-year. The market threw everything at it, kind of a good cop, Ben. We've gotten great numbers except Friday's number.
Right.
And isn't it possible that as long as we hold, say, 350 in the 10-year, we're heading up towards 380, 390? And everything's going to rest on the CPI next Tuesday. I mean, everything is going to rest on that number.
Yeah, you're right. It's very possible. And I've expected a weaker economy. So I've been wrong on that. The jobs market is red hot.
Yeah.
And that's what's kept these bond yields, high. Because the recession, we've seen the yield curve and all this stuff, and the Fed's been tightening as fast as they can, but they haven't taken down jobs, and that's why bond yields are holding up. So bond yields,
little double bottom at that 200-day, Larry. Under there, it's a different story. But if we're going to hold that 350 range, I think there's a chance that maybe by the end of the year, we're looking at new highs in the 10-year.
I think that would take a lot.
Okay. I think no one is looking for that.
I think you'd have to see inflation start to go back higher.
Okay.
That's what I think, but these markets move fast. But I definitely think you could test 390.
Okay.
I think the only way you get new highs in the 10 years, inflation has to really turn around. And listen, China's coming back online.
Right.
That's inflationary. Jobs haven't broken down yet. So this is the bond yields and the dollar are really they're the bus drivers.
Yeah.
What happens here, we can get our charts all lined up, and I'm just moving down the charts quickly, but we can get our charts lined up. But what happens in those two markets is going to determine everything else. Europe, I think, is set up really well.
Yeah.
And this could be, weak dollar, strong euro.
Yeah.
Europe has less tech exposure, but at the end of the day, holding that rising 50-day. So as long as this holds the 50-day, and let's call it, 46 to 47.50.
Yeah.
I think Europe looks good. China Internet. So I've got a position here in China Internet in the KWEB ETF. And this chart, I'm going to dial this out just for a second. I think that the potential on this one, the potential is huge. You see where I'm looking? So
yeah, I do.
It was 98, 97. They took it down to 17. It was below that 200-day for a year and a half. But now the 200-day has started to turn up. It's holding the 50-day. There's just a lot of good things happening here now.
Yeah,
Now,
55 would be about halfway back.
yeah, yeah. This,
It could still be a bear market rally, but there's, a nice retrace move underway for sure.
yeah, and I think 3750. If they can get this over 3750,
Yeah.
I think it opens up. Here's the thing: they're going to reopen. Their
Yes.
their government's made it crystal clear. They're just going to get it reopened, but it's also doubled off the lows. So there's going to be some back and fill. So I've got off the top of my head, I think I've got 5% total between China and the emerging markets.
Okay.
But I think that's got big upside.
Another
Microsoft,
dollar play. Yes.
yeah. Yeah. And that's why I've got to be careful, because I had Taiwan Semi and I made money, but I sold it. I booked my gains because I don't want to have everything in the weak US dollar play, because I've got gold and I've got miners.
Right.
And then I don't want to get run over.
Okay.
So, Microsoft, it's in the news right now. Not a bad chart. It's not the highest on my list. $2 trillion market cap, but it's getting a lot of play right now with the AI. Here's a high octane one. So
this whole interview, all my questions are from GPT chat. Oh,
are they? Oh, yeah, you're kidding, right? you got, there's so much with chat and the AI. I'm gonna put
I'm really just a hologram here, Larry.
I watched that movie with my kids, the Cloudy with a Chance of Meatballs, and they have the holograms. And I was looking at you, and I was thinking the same thing.
Yeah, here I am. I'll become a meme one day. So anyway, yeah. So you like China, and is this an American? Yeah, NASDAQ stock here. Wow.
Yeah, super micro. This is one. What I do on my website, I've got an active traders, like a high beta list. So some of these things, like this, is not a stock that I'm generally going to buy, because these pullbacks can kill my stops. But this is one that I put on the list over the weekend on Sunday, and all it did is it just cleared that 50-day
and exploding today.
It had a bullish 820-day cross, and it's very close to a potential breakout. So what I do I won't trade in this market environment. I'm more focused right now on the bigger names, the Freeports of the world, and AMD, NVIDIA, stuff like that.
Best of breed.
Yeah. But this is one that's very close. If this stock breaks out over 95, it could have a lot of upside to it. And then this sector, the communication services sector, this has been the leader year to date. Excuse me. So this is Google, Netflix, Disney, Facebook, all of those. And I think on this gap fill, I've got that high on the watch list too.
Okay. Can we see what you like in the miners?
Yeah. So let's pull up here. So the simple ones, GDX, as far as the gold miners, this 50-day test, it needs to hold 30. So the gold miners are a little bit choppier. So
I'm a buyer at 27.
And it's if the dollar goes up, it's probably going to go there.
Yeah.
BHP, all of these need to hold the 50-day. If they lose the 50-day, then it's then all bets are off.
There's a thing that mainly veteran commodity traders would know about, but it's called the February break. And it was a seasonal thing that happened in commodities. I know because I was on the wrong side of one once. Gold rallied into February.
Right.
And then it was like the Bataan Death March, and it went to under 200 from 400. This February break, I think, is going to be a buying opportunity. But do you know that the month February means, it's a Latin root, to purify. And haven't we had some cleansing of bears in equities and cleansing of bulls in commodities, oil,
Sure.
precious metals? So February, it's definitely having impact on commodity prices.
Yeah.
Uh,
And does that coincide with the dollar as well?
yeah, yeah.
Yeah.
So you get another pop up in the dollar, and then you get another drop in silver and gold, and then I think you could fade them.
Yeah, that's a concern. The dollar is a concern for me because I've got the metals, but so copper, $4 is the key level on copper.
It sure
The,
is.
the 50 at 396, but keep in mind also
That's a
these,
breakout right there at 4.
yeah, huge move. So 370 to, let's call it 440. That's what, 70. So a 50% retracement puts you right at $4.
Yeah.
Which is where you are. So I like the uptrend in copper, but I'd want to see that US dollar. And I don't have a prediction on the dollar because what it's going to come down to is the CPI,
right,
and these jobs numbers, and nobody knows what those numbers are. So it's this market is tougher. It's tougher than a lot of markets I've been in before, because in
I
2000
concur.
and in 2008, you really only had one focus. Right now, you've got to focus on what's the Fed doing, what's going on in China. Every day there's a jobs report or a CPI, and from one day to the next, you get good economic news, they turn everything upside down. You get bad economic news, they turn it upside down again. What's interesting, financials are breaking out. JP
Yeah, that
Morgan.
is interesting.
And
So they would like the higher yields, Larry.
Yeah.
And maybe that's one of the reasons. And you know what, I wanted to ask you this too, the way you're talking about how things flip. Have you ever experienced a market where it's all one market and it's basically dollar down, everything up, dollar up, everything down? Or a lot down?
It's been a long time. Maybe if we look back, maybe 2008 or 2011, something like that. But yeah, the difficulty with this market, because I've got more cash right now than I would like to have, but I'd rather have more cash and not get spun around, because the other day Powell talks, and everything turns on a dime. And at some point, if Powell says one thing and the market doesn't like it, everything goes down 5%. And when you're in an environment that no matter what your charts say, one word can turn everything on a dime.
You can throw your charts away after an event like that.
Right. So I've got more cash. I've got some good positions that I like. I'll look to add some exposure. I don't have any shorts. I haven't had any shorts coming into this year. I've got some long positions. I've got some high octane stuff. I've got a lot of cash, and we'll just see where it goes from there.
Okay, so Larry, why don't you switch over to your website, please? Blue Chip Daily, and
yes, sir. So
show people how they could continue to follow you after hearing you or seeing you here or on the video later.
I should have had this ready to go, Dale. I'm normally prepared, but my website, bluechipdaily.com. If you're interested in seeing as far as my thought process, my technical process, what I post on here is some of my daily alerts for subscribers. And what it shows is what I'm looking at on these charts. What's the reasoning behind it. And we offer a 30-day free trial, so people can join. It doesn't cost them anything. They get my private Twitter feed. And then after 30 days, if they like it, they can stay on board. And if they don't, then it doesn't cost them anything. And at least they've learned more about the process.
Yeah, nice offer, Larry. So take Larry up on it and watch this guy maneuver the markets and take heed on his caution that this is a difficult environment. That's why you have to keep some cash on hand. Because sometimes, Larry, it's going to be return of investment instead of return on investment.
Right.
Okay,
I heard a saying a long time ago, and I forget where I heard it. I might have seen it on Twitter. I might have seen it on TV. But a guy, I think he was a pilot, and he said, "I'd rather be on the ground wishing I was in the airplane than in the airplane wishing that I was on the ground."
yeah.
So if we've got cash and we're defensive, you can always put that cash to work anytime you want. You can just like that. But if you're overextended and everything goes against you, you can't get your money back like that. So I'm moving small right now.
You know what else besides taking a hit to your P&L is that there's the opportunity cost if you're over leveraged, because then you're nursing trades and you become risk averse to taking on what could be great trading opportunities because you're focused and dwelling on things you should have been out of a long time ago.
Right. And you're so preoccupied with what's going on there, just like you said, sometimes you can't take the next chart that's on your screen because you're worried about what's happening with those. So I'm still more defensive. I mean, I'm long, I'm not bearish. I've got, ideas on my screen, none of that. But I'm just still, because I know we're going to get a surprise at some point. There's going to be a CPI that comes out or that jobs report on Friday. There's always the zinger. So I'd rather have my cash and be able to buy the pullback instead of running away from the pullback.
So as you can see, Larry's stuff also teaches, besides makes recommendations, gives you the why so you learn. Thank you, Larry. Great conversation. I love having conversations with you.
I love being on with you because you're a true pro. You know the market. It's like the back of your hand, and it's always enjoyable to talk about markets with somebody that's knowledgeable like you are.
Well, Larry, I'm rooting for you, and we'll talk soon. Have a great wrap up the winter trading season and have a great spring trading season as well.
Dale, you too, my friend. Thank you.
All right. Larry Tentarelli, everyone. Follow him on Twitter at LMT978.